S04A. What does it declare? What is it? So this return is used to declare the individual income from all sources. So if you are a professional and you have the incomes that we spoke of just now, then you are required to file this return. All the incomes are represented on this return, from trade, business, profession, vocation, to employment income, to investment income, to income earned overseas. And it also speaks to non-resident income. So all of this is represented on this return on one form we call the S04, which you may be familiar with. Also, the form also details the allowable expenses and deductions. Yes, so some persons, some individuals are allowed to claim some expenses we call business expenses, business related expenses, and deductions. We're going to talk about that. And also the form also includes taxes and contribution. I know that's the part you've been wanting to hear about, but yes. Finally, now you may ask the question at this point, do these taxes and contributions, do I calculate them, or does the form calculate that too? The truth is, the form does that part for you. So if you're not familiar with what rate of tax you should pay in Jamaica, then the form will identify with your income from the get-go. Oh yes. So once you put in all those sources of income in the appropriate spaces that are provided, then the form will further around the other sections of the form. Because it's done online, it makes it much easier for you. You don't have to do the maths. The maths is already done. So if it's $2 if you pay and you pay $1.50 already, the form says your tax payable is $2 and how much you paid already, $1.50, and then it actually calculates the balance too. So you understand what I'm saying. It is very user friendly and you can relate to it. Of course, this form is concerned about those persons who have NHT and NIS deductions. Have no fear. It's all done in one place on this one form we call the S04. So if you're a self-employed person, a hairdresser, the common man, the gardener, if you are a taxi operator and you want to contribute to your NHT, then this form is for you. Yes, because it computes not just your income tax payable, but your education tax, your NIS, and your favorite, your NHT. Thank you so much. Now, just a brief overview of the form. On your screen right now, you will see an overview of what will take place that we just spoke of a while ago. So, you're going to see, let's say you're a self-employed person and your gross income is $10 million. And put it that you're a taxi operator. Taxi operator makes so much though? Hold on. So, as a taxi operator, your gross earnings is $10 million. You are allowed deductible expenses, we call allowable deductions. And of course, this could be like your registration. This could be the insurance for the taxi. This could be the amount of gas that you put in the car. You know, the regular thing. And those you will add up and we will allow it. And this is done under the income tax section 13. Now we have exemptions. Age, there is an exemption for that. If you are 65 and over, then you'll get $250,430 tax-free before income tax is calculated. It's an exemption. And if you are getting a pension already, yes, you get a pension exemption. So that $250 plus another $250,430 is tax-free. Tax-free here means income tax-free. All right, people? And of course, the form, just in overview here, that the rate is 25% here in Jamaica for individuals. So the rate is consistent and the amount payable is calculated. Now persons might be asking, what else does the form do? The form gives you any credit that may be allotted to you. So some persons may have losses carried forward. Those can be used to reduce your statutory income that we see above. That $4 million you're seeing right there is your statutory income. Yes. And the credits down below, that $100,000, yes, is also taken from the amount of tax payable. But one other thing I need you to note here is that the taxes that were paid, the income tax that were paid throughout the year. You remember the one where you pay March 15, that portion, and then you pay another one June 15, and another portion September 15, and then December 15. All of that is added together right here on the form, and it is deducted from the amount of tax that is due and payable. So in this case, what you have here is that the tax payable here was $556,361.50. And after we deducted all our credits and our estimated tax already paid, all you have to pay come March 15 is $361,000, a lesser amount. All right? And I want you to note, for those persons who are doing your income tax return self-employed for the year 2025, that the income tax threshold is not $1,500,096, but $1,774,554. Yes, you get an upgrade. All right, we continue. Now there are a few key terms that we must define. And like I said, you're going to see the actual thing when my esteemed colleague, Miss Antoinette Abuja Anderson, takes the floor to show you how it's done. So let's define a few key terms here. One key term, and these terms are found in the Income Tax Act, Section 2. So if you want to define anything at all, any term that you see used on the form, it is defined in Section 2 of the Income Tax Act. And I learned recently from one of our esteemed lecturers at the Technical Specialist Unit, Ms. Grace Smith, that if it's not in the Income Tax Act, ladies and gentlemen, you could go to Webster's Dictionary. Do the standard one. I don't recommend the AI version. You understand? The standard Webster's Dictionary should amplify some definitions. For example, business. The Act in Section 2 does not define it. But if you go to the Webster's Dictionary, or even the word trade, trade is not defined in any exclusive way. You know, it doesn't bring out the meaning. But the Webster's Dictionary, or there is a dictionary, I'm told that it's called the Legal Dictionary. These will help to define whether you're in a trade or it's a business. So where Section 2 doesn't, then the dictionary is the next best to use. All right, so person. Person here used in taxation usually refers to an individual or a body of individuals. We call a group. But in this case, for today's purpose, using the S04 return, when we say person, we are referring to an individual. That is why we include partners in the partnership and the others that we mentioned. So, income is very wide because you can have income from a lot of sources. You have income from employment, you have income from self-employment, you can get income from investment, you can get income from real estate, and the list goes on and on. There are certain types of income that are allowed to be used for tax purposes on the S04 form. So if you are into winnings and bettings and those things, those not allowed for this purpose. But the other incomes that we mentioned that you're going to be seeing are the incomes that are allowed. Let's look at another term. Another term that is used on the very first page of the S04 form is a term we said gainfully occupied. Gainfully occupied. Now, does anybody remember seeing that term? If you see that term and you know what it means, just type it in the chat right now. And yes, type it and someone is going to be seeing you and give us the correct answer. And there's another term here, gainfully employed. So one bright person in the chat, hey, type that in the chat for me and tell me because I want to know what it is too. Let me see what, okay. Millicent says gainfully occupied means you're self-employed. Did everybody get that? Millicent says self-employed. Who agree with her? Just let me see some hands. Stick up those, yeah, thumbs up there. There you go. So gainfully occupied, yes, Millicent, you are right. Gainfully occupied means that you are a self-employed person. So the next time you see it on the form, you know that you're self-employed. What about gainfully employed? What's the answer? All right, I'm getting some answers here. Gainfully employed means that you're chained to a company. No, that's not the answer we're looking for. No, 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 no. This one says means that you are employed. So you have an employer. Yes, if you say being gainfully employed means that you are connected to supervision, direction, and control of another person called the employer, then you are right. So if it says, if you see the question on the very first page, general information page, you will know whether you are gainfully occupied or gainfully employed. Now, I know some persons may have other questions about employed because of, you know, certain things that we see happening. Type it in the chat, and the chat monitors are there to ensure that all your other questions are answered. And I see Miss Colleen Williams, our esteemed technical specialist, is there in the chat room and able to guide us. And I want to make a big shout out to Mr. Lennox Fraser and the team there at the technical the hard-working team at the technical specialist unit that are always guiding us, ensure that we have it correct. Thank you, sir. Thank you, madam, the legal unit. So we go, now let's get to the other page. So right now, we are going to talk about what caused, and we're going to do it briefly because Miss Antoinette Sarah, she's waiting and raring to go, but we need to get these housekeeping matters out of the way. All right? So when we talk about the charging provisions of the Income Tax Act, it is that part of the act that allows for the income, that type of income, to be taxed. So the charging provision is that part of the act that, what they would say now, allows for the tax to be levied on your income and the type of income. So let's get right into it. This charging provision has two principles, two basic principles of income taxation, income and taxation. One principle, and I want you to stay focused now, people, because this is where it takes place. The two principles are the resident principle and the source principle. Resident here means that in order for you to be taxed in Jamaica, you must be a resident for tax purposes. So on your screen, you will see the resident principle, and you'll see the non-resident principle. And you will also see ordinarily resident. You will agree with me that if you are born in Jamaica and you live in Jamaica, the definition is wider than that, you know. But let's take it simple. If you're born in Jamaica, raised in Jamaica, work in Jamaica, you are here for more than 183 days of the year, you are resident for tax purpose, and you're also ordinarily resident. So when the question asks, are you a resident? Immediately you can tick that. But what if you are a farm worker? You're a Jamaican, you go to Canada and you go on farm work. And you spend 6 or 7 months there and you earn income there and they take out the tax out that already. And then you come back to Jamaica and you have a little taxi and you run taxi and you make money too. How do you file your return? Would you say you're a resident on one hand and then tick non-resident? No. You are resident for another reason, and that is you have all your interests here. You are in Canada as a farm worker to earn an income. When you're done, where you go back to Canada? No, you come back to Jamaica, which is where you have your house, your land, your car, your family, your bank accounts, etc. Your vital and financial interests. That's very important because that helps to determine your residency. Why is it important? It is important because as a resident, you get the threshold, you get the income tax threshold when you're filing this return. On the other hand, let's take non-resident. A non-resident is that person who is not normally ordinarily a resident here in Jamaica. They are residents in another jurisdiction that we have a double taxation agreement with, and they only come here up to 90 days for the year and they work. Or if they don't work, they might have real estate here or other properties, or do they're consultants, they're professionals, etc. But their physical spend in the island is 90 days, up to 6 months, up to 182 days. They are called non-resident for tax purposes. So you are a non-resident if you are not here for 183 days or more. If you're here for 90 days, and between 90 days and 183, then you are a non-resident. You're not localized here in Jamaica. You just come to do work and go back. So in that case, the difference now is that you don't get the income tax threshold because it is only residents who are allowed or given that principle, given that that benefit, sorry. So jurisdiction matters in which the income is earned. Jurisdiction, which is now what we call the source principle. So if the income is earned in Jamaica or the income originates in Jamaica, even though you are abroad, then it is only the income that is earned in Jamaica that is subject to Jamaican tax based on the treaties. So if you have income from abroad that is taxed already, it cannot be taxed here again because the treaties would prevent that. It's a reason why. So source is very important. Income earned in Jamaica by a non-resident is taxable only on this income that is earned here. Let's move right along. So we would have said what resident and non-resident is. We can just read a little from this now. So it says ordinarily resident, which we discussed already. But one thing to note is that as long as you are ordinarily resident in Jamaica for tax purpose, and as long as you maintain ties with Jamaica or the jurisdiction that you are ordinarily resident in, then that's where your source is, your residence is. You're resident for tax purposes. Now, it could also mean being a resident, as we mentioned earlier, you can go to another jurisdiction. Let's say you go to America to study for 2 years, but you also do a little work there too, right? Does it mean that you're not entitled to this threshold? So you can be resident in 2 places, because if you're in America studying for 2 years, you have to get some kind of permit. Or you can have 2 locations that you're resident, in Jamaica and America. So the Jamaican income, therefore, would be subject to the taxes that are due and also the benefits, such as the income tax threshold, by virtue of you being ordinarily resident. And we says the non-resident person is not here for more than 6 months, and he or she has no intention to establish permanent residence. All right? Now, I am going to do a little exercise with you. So Here we go. I'm going to read a question, and I want you to type in the chat whether this is true or false. So based on what we know about residency so far, let's go. So here's the question. Your answer should be true or false, and you may type this in the chat. So Senorita Miriam Solomondes, sorry for my French, Senorita Miriam Solomondes from the USA is ordinarily resident in Jamaica. She was contracted to carry out HR services in the Ministry of Education, Jamaica, for 4 months in 2025. She will return to her country at the end of the contract period. Is this a truthful statement or is it false? Is she resident in Jamaica or non-resident? Now type your answers. Remember now it's true or false. Do we see any answer? All right, we're looking. Come on, people, don't be shy. Type your answers. Let me read it again. Miriam Solomondes from the USA is ordinarily resident in Jamaica. She was contracted to carry out HR services in the Ministry of Education for 4 months, at the end of which she returned to her country at the end of the contract period. All right, awesome. Awesome. I hear the answers coming in. And the predominant answer we're getting here is false. So false, if you said false, you are correct. You are correct. That is indeed a false assumption. Why is it false, people? Why is it false? Because if she come from the US and we said that she's ordinarily resident in Jamaica, that means she would have to be here for 6 months or more and have her interest here. But this says she only came here for 4 months, and after which she returned to her country of residence. Oops. So that's a trick question, right? But you got it right. It means that the resident principle is resonating with you. Let's move right along. So we're going to continue with the resident principle now, the charging provision, and we're going to look at some of the other incomes. Remember we mentioned income from trade, business, profession, vocation, but there are some other incomes that are mentioned. I'm just going to briefly mention these incomes. All right? So profits or gains accruing in or derived from the island or elsewhere, whether received in the island or not. So we have ordinary dividends, discounts, and it's right up there on your screen. Rent, royalties, premium, employment or vocation, distribution other than those we mentioned. All of those are income that, based on this provision, the charging provision, section 5.1b, these are some of the other income apart from the working income that we spoke of earlier, the trade, business, and these income, if you want to do ordinary dividends, you just go and invest in some financial instruments, right? And at the end of the year, they declare that we make a profit of so much, and we declare a dividend of so much. Yes, that's what they're talking about. And these income are now subject to tax here based on section 5.1b. Let's see some other incomes real quickly. So we talk about emoluments, and these are usually employment related, usually. So we have basic salary. Some people think it's only the salary alone is emolument, but commission, you get a tip, overtime, bonus pay, stock options, all of those comprise your emoluments. And of course, you get living accommodation. It's not free, it comes with the job. All right? So it has to be quantified, a cost, a value placed on it, because income here represents an amount in cash or an equivalent value. All right? So that's income. Now, the charging provision, and this is one other area before I move on that I want you to note, and it's section 51C9. And this area speaks about persons. And remember, when we talk about persons now, we're talking about, in this case, when we talk about people, individual. Yes, you're an individual. So it can also mean a body of a corporate body, right? But we're not talking about corporate right now. That is for our next session, which comes up in March. So if you're a company, that's going to come up. We're going to have another session on that, which we will talk about persons from the body corporate perspective. All right. So persons then who provides personal services on behalf of another, whether it's a company or another, and they are subject, this is the operative word now in this section, they are subject to supervision, direction, and control by the employer. The act in this section here says the service provider is deemed to be an employee. So it means that is an employer you're working for. But the only thing that why you're deemed to be an employee here is the act puts it for income tax purposes only. But you're an employee here because these persons that are providing personal services are not usually referred to as employees. So this section are speaking to self-employed persons in essence. But when you are doing personal services as a self-employed person and you're subject to supervision of another, direction and control, in other words, they tell you what to do, how to do it, what to do, how long you do it for, etc., etc. You are doing personal services. And your employer, your deemed employer, should take out the income tax only. What does it mean then? It means, therefore, that you need to go and file the S04 return to account for the other taxes and contribution. All right? And remember, you can post all your questions in the chat. Our chat monitors are actively engaged in this process, and they will be able to bring clarity or much more clarity to it. So, a deduction, know your deduction. Your deductions must be wholly and exclusively incurred in acquiring the income. So people, let me talk to you briefly. Talk with me now. So, if you are a taxi operator, and I use taxi operator, but let's say, all right, let's use the next one. Let's use a cosmetologist, persons who do hair. You're a cosmetologist, and at the end of the year, you are now ready to file your individual income and taxes and contributions payable return that we call the S04 and by extension the S04A. What is required to be put on this return? You know the income already. Come on now, ladies, talk to me. You know the income already. Income is something that ladies especially don't miss. Right, men? Yeah, man, we kind of don't matter about the income, but, the ladies, them know how much money come in and them know how much money I pay out. So, help me out here now. So, you would have known how much income you would have earned for 2025 as a cosmetologist, ladies. And you would have also known how much you spend to make that income. When we speak about wholly and exclusively incurred, we're talking about those expenses and those disbursements that can be tied directly and in some cases indirectly, but for the most part, directly in earning the income. So, question, does school fee come into it? Cosmetologist, talk to me now. Does school fee come into it? No, not at all. Does lunch money come into it? No, sir. What about house bill and food bill? And you say, but we have to eat food and we have to... Yes, I agree with you. But based on this section here, and this section is directly coming from Section 5 of the Income Tax Act, it says in earning the income, you're allowed to claim those deductions and expenses that were wholly and exclusively incurred exclusively in earning that income. So it therefore means that all the other things sounds like it's personal expenses. Don't, I'm beautician. Yes, man. So those will not be allowed and those are not allowed. So section 13 then of the Income Tax Act actually tells you what are the deductions that are allowed. And section 15 tell you the deductions that are not allowed. And if you're not sure which one you should allow or should not allow, then you can always give us a call. Give us a call at our 888, our customer care center, 888 tax help, or you can call any of our education unit, our taxpayer service section, and we'll be happy to explain and bring a little more clarity to it. All right? Let's move on. We're getting there. I see Miss Anthony saying, hi, colleague. We'll be right with you. Don't go away. Expenses that are deducted when paid. We are fun people here at TAJ, so forgive us if we sound like that. So you have other expenses that if you didn't pay it, then you can't claim it. So you might pay 9 months, business people, you might pay 9 months rent out of the year. And then the 3 months, the last 3 months, you didn't get to pay it. You can't claim it as an allowable expense because you did not pay it in the year that it was incurred. You have to carry that over to the balance sheet as an expense. We call it now, it's not receivable, it's a payable. In other words, an amount of expense to be paid. So next year you try and make sure you pay the people rent so you can bring it on your return. And the same thing applies for interest. So if you have a business loan and you earn the interest, you have to pay interest on it. Not earn, you pay interest on that business loan. Then it means that if for the 12 months you only paid 11 months, then you can only claim 11 months of that business interest, the amount that was paid. And the same for insurance and some others. All right? So the operative word here is it must be paid. As an expense, it must be paid in order for you to claim it. Well, it's just the law, I know what you mean, but that's the law. And we have some others here, and I'm just going to do 2 of them briefly. One we call donations. This is another allowable deduction that you are allowed to claim. But in the first instance, we have covenanted donation. Covenanted donation, as the word suggests in section 13(1)(o), covenanted donation is by covenant. It's sacred, people. Sacred. S-A-C-R-E-D. Sacred. So how does it work? It works like this. There are annual payments that you secure by deed of covenant for a period of 5 consecutive years. 1, 2, 3, 4, 5. And these only go to the UWI and UTEC. So if you're an institution right now and you don't see your name in the act under this section right here, so it means that you need to contact the government because you want it as an allowable deduction too, yeah? So you'd have to call them up and ask them, so what about us? And you lobby for that, okay? So remember now, it's for 5 years. You must make this covenanted donation for 5 years. So what if you do it for 4 years? Will you be allowed to claim that as an allowable deduction? The answer is no. The law says 5 years, and once you have given those sacred payments in 5 equal installments, so you can't pay 3 million this year, year 1 and 2.5, and then you go back to 3 again, and then you go back 1.5, and then you go back to 4 the next year. That's not going to work out. It must be consecutive payments of equal amounts for 5 years, folks, and you will be allowed it as an allowable deduction. And in this case, it matters whether or not you make a profit. So we are encouraging people to be charitable. Jamaican tax people or people paying taxes here in Jamaica are charitable people. So please, this is why you get a donation here as an allowable deduction. Give generously. Now, the other type of donation here, real quickly, is the one that you can contribute to a charitable organization, or you can contribute some money as long as the money does not exceed 5% of your statutory income. So you can contribute money. Some people even contribute property, but the property must not exceed 5% of your statutory income, whichever is less. Now, there is one little caveat here, folks, in this case, in this other donation case, and that is you must be earning a profit. If you make a loss, then you're not allowed to claim this donation that we speak of here now. Okay? It doesn't stop you from giving generously, but you will not be able to claim it as unallowable deductions. And of course, there are some others here. Just take a picture of it quickly for me. For the purposes of ascertaining your statutory income, no deductions shall be made in respect of domestic or private expenses. So we spoke about those already. And any other expense not incurred wholly and exclusively in earning the income, yes, you will not be allowed to claim those. And I think my colleague will be coming to explore this question. But let me put this question up, folks. Look at this question. So we're on question number 2. And I'm going to ask you a question, and then I will ask you briefly to type it in the chat. Or I'm getting a signal here that says, go to the next slide, and then we can come back to it. So there is a gentleman on screen right now, and he's excited about filing his self-employed person's return. I agree with you, brother. I agree with you. Yes, we file our taxes, folks, because it's the right thing to do. We file it because of those benefits that we get. We also file it because we want our NHD house. And we file it because we want the pension when we reach 65 or over. Don't it? That is why, We file it also because we want our roads to fix, whether you call it parish council road, parochial roads get the least attention. However, we are happy to file our taxes because of the services that it provides and the benefits to self and country. So be loyal to country. File your taxes today. This guy is happy. I'm with you, brother. All right, so let's continue. We have now on screen, and those who don't have it can take a picture of the thresholds. So we have each year, the financial year, we have the previous amount, and we have the amount that it was increased to, and we have the effect, what we call the effective threshold. Now, why do we have an effective threshold again? We have an effective threshold because the threshold was increased, but not at January 1. It was increased some other time during the year other than January 1. So if it was increased, in this case, let's see now. So for 2025, the previous amount was $1,700,088. But then this amount was increased on April 1 in April 1 of the same year, 2025, to $1,799,376. So how do we get the real threshold? Is it the previous one or the one that they now have? Or we add the two of them and call it that? No. So what happens here is that we would take the first 3 months in 2025 at the old rate, and then we would take the next 9 months at the new rate, which is April 1 of 2025 to December. The new rate would be 1,799,376, right? So we would, how we do the maths now? We would divide that. We would $1,799,376 times 9 divided by 12 to get the monthly amount for the next 9 months. And then if you times that by 9 again, you would get the 9 months threshold rate. But remember that you have the first 3 months at the old rate, and so when you add both the new rates for 9 months and the old rate for 3 months, you get what we call an effective threshold. And in this case, it is $1,774,554. That's the effective threshold for the year 2025. And when we reach 2026, we have another increase in April. It's pure April. Them are increase the things them by, people. You understand me? Yes. But April for 2026, the effective threshold again would be $1,876,614, and 2027, and you look at the effective threshold. So make sure you take a picture of this. Going once, going twice, and we move to the next slide. And of course, everybody would know this part already, the income band. So the income tax rate for individuals, we have 3 rates. For individuals, we have 3 rates. Let me be a repetitive thing here. For individuals, the income tax has 3 rates. We have a rate of 0%. We also have a rate of 25%. And then we have another rate of 30%. And in summary, if you earn between $0 and $1,774,554, you pay 0% for income tax. And I should hear a rousing applause there. I remember when the threshold, the tax-free portion was $40,520. Anybody remember that? Yes. So we have come a far way, folks. It means that we are improving, and there is still much more to go. So we ask, and we could not have done it without you, the people working together with Tax Administration Jamaica to serve even better. We appreciate you. We appreciate you. So now at 0% is 1 million so and so and so. Between $1,774,000 to $5,999, you pay 25%. And this, of course, is your statutory income. Statutory income. This is not gross income, people. It's statutory income. What is statutory income again? Remind me. Statutory income is the income that remains after deducting allowable deductions and exemptions, including pensions, from the gross pay, from what your gross is. For self-employed persons, it would be your net income, and if you were contributing to a statutory pension scheme, you take out that too. All right? And of course, the rates are there. Please take a physical picture so that you have it for your records. And these speak for themselves because you would have been doing it. The NIS, this one is the one for employees. And we take the last one, the age limit for payment of taxes and statutory deductions. Somebody was saying to me yesterday, so it's when we stop paying income tax. I said, boy, that is a head-scratching one, because I tell you something, the last thing I heard was when you go at the gate and St. Peter said, all right, come. That is when you stop. So we'll take the tax from you right there, and when you reached inside here, we don't have any control over that part. So pay all your taxes here and now on the land, so you don't have to get there. When you get there, you're tax-free. All right, so NIS, that was for laughter, folks. So your age range, you pay NIS between age 18 to 65, and it goes up to 70 years old. Now, for further information on that one, you can contact the NIS office, and they'll be very happy to tell you about the part where you go up to 70 years old. Right? I have a feeling that I only want to pay NIS up to age 65 if we get there that long. Right? But NIS under Section 10 will tell you that they can ask you to go up to age 70. All right? But do browse the NIS department, and they should be happy to assist you. For NHT, you pay between the ages of 18 to 65. That's when you're allowed to pay NHT, ladies and gentlemen. After that, we stop taking NHT. NHT stop asking for any more. It's as simple as that. You should have get one house already, or if you don't get a house and you're 65 years old, try and apply for it in the year that you're 65 and make sure your granddaughter, them get the benefit. But just don't go back and don't get nothing. All right? But NHT deductions are made up to age 65. And the same for NIS, and for education tax, sorry. Persons who are employed, if you're in employment and up to age 65, you will pay education tax. After age 65, your employer should not be deducting education tax from the salary that you get. And it doesn't matter how much you get. All right? This is the law. And at least 18 self-employed persons who are earning above the minimum wage. That's another thing, folks. You must be earning above the minimum wage in order for you to pay education tax and NHT. So, I'm not going to say anything else on that part. Gentle reminder. So, returns, filing date, and everybody knows this one, March 15, by legislation, but where March 15 falls on a weekend or on a Sunday, then it is the next working day. So in this case, your return for 2025, your S04 return for 2025 is due March 16 of 2026 because the 15th was a Sunday. All right? So legislatively, you are right to file it on the 16th of March this year. Boy, I feel them coming with it already. Yes. So tax calculated are paid on a quarterly basis for the calendar year. And we had mentioned it already that your taxes are paid in 4 quarterly installments. Folks, it is not true. And you hear it from one of the horses. What is it, the horse's mouth? Yes, that it is not true that you can pay little by little. You can pay it by little, but let's put it this way. Little by little means that if you have $100,000 to pay in taxes and contribution for the year, it's $25,000 you're going to pay each quarter. So March 15, you would pay $25,000. But what if you don't have the $25,000 one time? You make sure that you pay from January to March, you pay little by little. So 25 divided by 3 is how much? 8. 8 3 is 24. So you pay $8,500 every month. By March 15, you would have paid your quarter. For those who have it on March 15, one go, can do that. For those who have all of it, the $100,000 one time, please pay the government their monies. We appreciate you. Thank you so much. And thank you for sharing this section.